typical group plan might provide coverage of 1 to 2 times your salary. If you're earning $50,000 a year, that's $100,000 max. Is that really enough to secure your family's financial future? Probably not. So here's why term life insurance wins every time. Hey, so what's up? Today we're breaking down the different types of life insurance: whole life, universal life, variable life, indexed universal life, group insurance, and accidental death insurance. We're going to figure out what works, what doesn't, and where you might be wasting your money. Oh, and by the way, congratulations for being here today, getting educated, improving your financial future, while others are scrolling through endless food videos, pretending they'll cook someday. Before we dive in, don't forget to hit that like button, share this video with your friends, and please subscribe to the Alonzo Academy. Turn on those notifications so you don't miss out on any financial wisdom we drop here weekly. Let's do it now. Number 1, whole life. Whole life insurance is like a savings account that never quite grows up. It's a permanent policy that provides coverage for your entire life. Sounds great, right? Well, except here's the kicker. It's expensive, and the cash value grows slower than a snail in traffic. For example, let's say you're 35 and paying $300 a month for a $250,000 whole life policy. By the time you're 55, you've paid 72 grand in premiums, and your cash value might be around 50 grand. Let's say less than what you paid in. Did you know that according to the 2023 study, over 70% of people who buy whole life insurance lapse their policy within 10 years? If you're considering this option, ask yourself, do I really need lifelong coverage? Or am I better off investing the difference in a tax-deferred retirement plan, or maybe even a tax-deductible retirement account? Number 2, universal life insurance, UL. Universal life insurance offers flexibility. You can adjust your premiums and death benefits as life changes. Sounds good in theory, but if you're not careful, you could end up with a lapsed policy because the cash value can't cover the increasing cost of insurance over time. For example, a $500,000 UL policy might cost you $200 a month when you're 30. But by the time you hit 60, that same policy could cost $600 or more. But by the time you hit 60, that same policy could cost $600 or more monthly. A 2022 insurance survey found that 40% of UL policyholders didn't fully understand how cash value depletion works. It's like annual renewable term. Your cost of insurance goes up every single year. Do you have a plan for managing those premium increases? If not, this might not be the best fit for you. Plus, the rates of return aren't very good compared to other investments. Number 3, variable universal life insurance. It's basically how you invest your policy's cash value in a mutual fund like account. It's not an actual mutual fund. It's mutual fund sub-account. Think of it as like life insurance meets Wall Street. It does sound exciting, but here's the risk. If your investments underperform, your cash value could drop, leaving you with higher premiums or even a lapsed policy. So here's the real talk. A 2021 financial study showed that over 50% of variable life insurance policyholders saw negative returns in at least 1 year. Would you really want your life insurance tied to the stock market roller coaster ride? Probably not. Not the best idea. Number 4 is an indexed universal life insurance policy. IULs are like ULs, but with a twist. You earn interest based on the stock market indexes like the S&P 500. Good news, right? Exciting, right? Your gains are capped though, but so are your losses. However, these policies come with high fees and complicated structures that make them tough to understand. That's why they're kind of a no-go. For example, let's say the S&P 500 grew 10% a year, but your policy caps your gain at 7%. Meanwhile, you're paying 2% in fees, so your actual growth is 5%. Doesn't that sound great now? It doesn't sound that great now, does it? It's usually a bad deal. Number 5 is accidental death insurance. This one's simple and cheap, but here's the catch. It only pays out if you die in an accident. And statistics show that only about 5% of deaths are actually due to accidents. Did you know that? If you're relying solely on this, you're taking a big gamble with your family's financial future. Don't do it. Bad thing. It's kind of like if your auto insurance said you had to crash on Sunday and you had to get hit by a red car. You wouldn't buy it. Number 6, group insurance, like through your work. Group insurance is often offered through your job, and it's usually affordable, but here's the thing. It's not portable. When you leave your job, the coverage disappears. Plus, most group plans don't offer enough coverage to protect your family for the long term. For example, a typical group plan might provide coverage of 1 to 2 times your salary. If you're earning $50,000 a year, that's $100,000 max. Is that really enough to secure your family's financial future? Probably not. So here's why term life insurance wins every time. Let's talk about term life insurance, the real MVP. It's straightforward, affordable, and gets the job done. You pay for coverage over a set term like 10, 20, 30, or even sometimes 35 years, and that's it. Here's a quick example. A healthy 35-year-old male can get a $500,000 policy for 20 years for around $25 a month. Compare that to the $300 you'd pay for a whole life. That's $275 monthly difference that you could invest in a tax-deferred retirement account. Or by the way, if you're a business owner and you put it into a SEP, it's a tax-deductible plan, which historically is going to average between 8 and 10%. Some years you can get even more. So are you a little bit confused about life insurance? You need help choosing the right policy? I've been in this industry for over 30 years. I've analyzed thousands of policies and helped countless families secure their financial futures. Reach out today. I or one of my agents will guide you personally, no pressure, just solid advice. Come on, man. Click the link and let's have a conversation. Leave me a DM or leave me a comment in the message, in the comment section. Oh, and don't forget to check out my book, Wealth on the Beach: 11 Universal Laws to Building Financial Freedom, on Amazon and also on Audible. It's loaded with tips to level up your financial game. Plus, my Wealth on the Beach coaching program teaches young entrepreneurs how to crush their goals. It's 2025. Are you ready to level up? So thanks for watching. Drop the word freedom in the comments if you're ready to take charge of your financial future. Remember, the best time to plant a tree was 20 years ago. The second best time is now. See you in the next video. And always remember, dream bigger than ever, get after it, but most importantly, do it now. God bless you. If you like this video and you want to watch another one, click right here.